So I think that leaves us with these overall themes, like a strong brand. They have this premium positioning. Their growth seems to be recovering from the pretty significant hiccup that they encountered in 2017. So the question is, does it have that staying power, or is this another single focus kind of company that is able to create a market and dominate it? Has this status symbol sort of brand, but when they encounter really significant competition, is that going to erode their margins, hurt their market share, and end up really hurting the momentum for the company? Are you a buyer?
My opinion is don't buy this stock, just Yeti. If I can make a bad joke, a lame joke.
Oh, that was good. And I hated it, but it was pretty good.
Thank you. So this one needs some seasoning, a few quarters of looking at financials. And listeners, we've given this advice with a number of IPOs that we've discussed over the past couple of years. But I think it's sound advice when there's a really compelling company that you just have to get into. You can see all numbers soaring. Market demand is shooting up. Management's hitting everything. Company's going on all cylinders. This is not really one of those scenarios. To give you one key number, if you look at marketing spend has increased. They've spent about cumulatively $156 million between 2013 and 2017. 50 million of that was spent just in 2017. And that sort of tells me that, look, this relationship between needing to market and generate sales with an acceptable margin is sort of questionable, perhaps. And I would wait a few more quarters, look at that marketing expense as a total of sales. And that will give you an indication of many of the pieces that Vince has talked about, why this might not be, a fast-moving company out of the gate after its IPO. So my opinion is wait on it. Look at these next couple of quarters. It's really very close to the situation that it had in 2017, which it's still recovering from. So I say wait. There's no hurry to buy this. Buy one of their products. Enjoy it at the beach in the meantime. What about you, Vince?
Yeah, that's our usual kind of disclosure that we have when we talk about IPOs, especially when it's soon after that after the company has priced. Some listeners, I'm sure, are also probably getting sick of hearing this kind of cautionary advice that we give. But with any new public company, I think it's smart to give them at least 6 months, maybe a year, get their footing, release some quarterly results, even get a feel for management during their earnings calls, how they present the results, respond to analyst questions, how much they disclose, and just how transparent they are with that kind of information. Thinking about all that before taking a position. But I was looking at the current trading level, again, about $17 per share as of this recording. So that puts the company's trading at over 40 times trailing earnings. But first half of 2018, that saw 34% year-over-year top-line growth, 73% adjusted EBITDA growth. So it does explain why expectations are high, and people are excited about the opportunity that the company brings. Making my call now for Yeti, as fellow industry-focused host, Nick Seipel put it once, I'm neither overwhelmed nor underwhelmed. I'm just whelmed by this story. And I love the branding and the tailwinds in some of these new target markets and new geographic markets. But we've also learned some pretty hard lessons over the years in consumer and retail for similar stories. I mentioned GoPro earlier, but you think about also Fitbit or Groupon, Blue Apron, even Under Armour, which had a pretty long run, strong run, where these companies soar on a nascent trend on this brand prestige, but they start to stumble once they face more serious competition or the fad, for example, burns out. And I still have to ask myself how many, $500, $800, $1,300 coolers kind of company sell. How many are people looking to buy? When you buy one, I can't imagine you're replenishing this on a yearly basis, for example. So that gives me some pause, but I'm actually pretty excited to follow this company. I think there's a lot going to it, there's a lot to support the story as well. Any final thoughts from you, Asit?
Look at the debt as well. So when the earnings coming out shortly, take a look at the marketing expense in relation to sales, as I said, and look at that debt load, any changes to that, and any indications from management of where they want to be in terms of leverage would be maybe the two most crucial points, along with the usual color on where the company wants to expand and how well it's doing.